Folks, we are late, but we are live. Welcome to, there it goes, Thursday Night Stock Charts Live. What we will be talking about today is a topic that nobody wants to talk about: natural gas. Natural gas. We had a very good week in natural gas this week. We'll talk about that trade in a moment, and we're still long of it. And I'll talk about the macro reasons as to why we are long of natural gas. Now, we're going to also talk about silver. A lot of people are talking about gold. They're not talking about silver per se, but we did some buying of gold today. So we'll also talk about the weekly charts. How are we poised to close out? Excuse me. Let me retract. Let me go back. How did we close out the month, the quarter of Q1 of 2024? It's in the books. Happy Good Friday to everyone. Thanks for being here. And let's get to it. Let's first talk about the economic data that has been reported this week and what is coming out tomorrow. Futures market will be open tomorrow for a brief period anyway. So not much on Monday came out. A couple of Fed heads. On Tuesday, durable goods beat. Consumer confidence missed. GDP revised upward. That's a switch. Usually they revise lower. Consumer sentiment final, that beat. And tomorrow we're going to get PCE. That comes out. That's the Federal Reserve's favorite measure of inflation. Now, luckily, the markets are going to be closed for the Fed tomorrow. They're going to get a 3-day weekend. I'm wondering whether or not this is going to come in really, really hot tomorrow. That way it gives them a 3-day period for which the markets to settle out. So it's going to be an interesting day tomorrow, even though the markets are closed. Again, futures markets should still be open. Equities and their valuation, S&P 500 sitting with and sporting a very rich 35 P handle on a trailing basis. Somehow or other, we're more expensive now than when we started out the week. And this is a chart that I found really fascinating. From FactSet, while S&P EPS estimates for Q1 declined by 2.5% during the quarter. So you had expectations for earnings going into Q1, and they have been ratcheted down from the beginning of that point in time by 2.5%. Yet the S&P 500 increased in value during that same period. And here's the chart. EPS in solid line, price of the S&P 500, an exact divergence. And this is not the only divergence that we're seeing here. We're going to talk about one that has to do with employment in a moment. Now, this chart here, this is off of the CME group. Now, the CME group, this is the Fed Watch tool. It measures the probability of a Federal Reserve ease. Now, for the life of me, I haven't been able to understand why the markets were expecting a rate cut. I just didn't get it. Supposedly, we have GDP of 3.4%. Who ever heard of the Federal Reserve cutting interest rates when you have GDP in excess of 3%? I don't know over time. Why would you cut rates? You have gasoline prices up, 30% on the quarter, on the year. Oil prices up, commodity prices up, inflation is everywhere, yet they're going to cut rates? It doesn't make sense. And I've never bought into it. I've bought into the carrot and the stick approach to dragging the market along up with the bait of there being an ease in the market, but never delivering on it. Remember that only a few months ago, March was a foregone conclusion. We were going to have a rate cut. Then came May. That was a foregone conclusion. It ain't going to happen. It's not happening. So when you take a look at the CME Fed Watch tool for June, that's now just 63.6%. This was above 80 at one point in time. Then you take a look at July. This is above 80 only a couple of days ago. Now it's dropping down below 80. It's going like this. The probabilities are going like this. Less and less likely that we're going to get a Federal Reserve rate cut before July. July is pretty much a sure thing. June, right now, I got to be honest with you, it's jump ball. In a few days, this could be below 50%, and I don't know what the Fed's going to do. I just had chicken tenders with hot sauce, really hot sauce from Korea or someplace like that. Stuff is hot, really good, really, really good, but hot. Okay, that's the Federal Reserve. Philadelphia Federal Reserve admits, and we've been talking about this forever. Now the Philadelphia Federal Reserve admits it. I don't know how they know. They're not supposed to be part of the government. Those numbers are put together by the Bureau of Labor and Statistics, but somehow or other, the Philadelphia Fed has this data to say the BLS is wrong. So here we go. Philadelphia Fed admits U.S. payrolls overstated by at least 800,000. It gets worse. The first red flags emerged in the summer of 2022. That's when Biden Labor Department started well and truly rigging the labor market data. Now, we've talked about this. We've talked about this a number of times. It doesn't make sense. You have two surveys that are out there. One in green, that's the establishment survey. Perfectly named. The establishment, the corrupt government surveys. That's been going like a moonshot higher. Then you get the household survey. That's establishment survey is it's an estimate. It's a guess. Whereas the household survey, they're knocking on doors. Hey, you working? People working here? They for the longest of times were very, very tightly correlated. Now, back in March of 2022, 2 years ago now, appropriately named here, something snapped. And the government numbers have just gone straight up, where you have the household survey, it's gone down since March of 22. So now the Philadelphia Fed admits this is all BS. I continue. What happened? Really? You're gonna do me like this? Here we go. Okay. Oh, all right. They just took away my article here. Okay. Sorry about that, folks. Basically, what the article goes on to say is that net job growth has gone to foreign-born workers, not U.S.-born workers, over the past couple of years. I repeat, net job gains have gone to foreign-born workers, not domestically born workers. So we like to do ratio charts here just to show the relative weakness or strength of an underlying index relative to the S&P 500, because we want to know, what's got organic growth strength relative to the S&P 500? That's the benchmark. That's the quote unquote market. So we look at the price of Bitcoin, and obviously Bitcoin, this is a weekly chart, up 4.82% relative to the S&P 500, and it's only going up higher. And when you take a look at it on a quarterly view, up 51.7% more than the S&P 500. And there's a reason why I'm starting off with Bitcoin. The conversation is not about Bitcoin. It's just really to introduce you to ratio charting, because it kind of gets worse. And for those that are out there that are die-hard bearish on or bullish on this market, you really need to reevaluate your thinking a bit. And the reason is that all is not right. And we're going to go to the weekly charts in a moment of the markets. Leadership names are now failing. They are rolling over. Apple, Tesla, I can go on here. Amazon, I don't think is broken out this week. I haven't looked. It was one of my top stocks for the new week. I haven't even looked at it yet. But let's answer that question. I want to know what it did. It's up on the week, a day, on the week. It's up. So we were right on the call, but still no breakout to new all-time highs. Therefore, it's a laggard. Amazon's a laggard. It's a beautiful chart, but it's still a laggard. So you have a lot of stocks that are no longer participating in this market, and yet they were the leadership group. Then you take a look at the yield curve, and we actually closed down on the week. We were up by about 4 bips on the week, and we gave it all back. So this is actually bullish for equities on a weekly time frame, but we don't care about a weekly time frame. We're looking at monthly time frames. And folks, for those not familiar with the yield curve, you're just joining in, you got to keep in mind that history may not always rhyme, or excuse me, may not always repeat, but it certainly does rhyme. And we are bull flagging out here on the yield curve and getting ready for another move up higher. Now, if you want to know when the steepening of the yield curve began, and for those not familiar, when you steepen on the yield curve, that is bearish for stocks. So we broke out. Let's go to my other weekly chart, monthly chart. We broke out back here in October. When did this most recent bull rally begin? October, right? So we broke out, and then we paused in the back half of October of 2023, and then the S&P 500 began to rally. Here's the S&P 500 in gray. And we pulled back, and we've been consolidating those gains, that breakout, ever since October. Now it appears as though all of this retracement may in fact be very, very close to the end. And if we do begin to break out and steepen here on the yield curve, you got to expect that the S&P 500 is going to roll over. And I kind of went over this before, but now they're talking about it. I first heard about it at the gym. CNBC posted something very early in the morning, because I've been saying, it doesn't appear as though they're going to cut rates. It looks as though they're stringing the market along. They've been doing it for months now, and I don't think the market's going to take it much longer. So I'm at the gym 2 days ago, and sure enough, on the screen is the Federal Reserve moving the goalpost on the markets, promising rate cuts, yet saying, oh, you know what, maybe later we'll do that. So now you get this. Stocks, gold, and crypto soar in Q1 despite rout in rate cut expectations. Now it's getting printed. You're hearing it on CNBC. You're seeing it in the press now that the probability of these rate cuts is probably more of a ghost because, again, folks, you can't take your eye off of this. This matters. GDP, 3.4%. Why are you going to cut rates? What madman is going to cut rates in a 3.4% GDP environment with gasoline prices up 30% in a single quarter? What are you talking about? Who's BSing who here? Unless, of course, there's something very, very wrong that we don't know about yet. And it's entirely possible. And I think that we need to start looking closer at Japan. We'll go to that in a moment. Let's say hello to folks. Jody, welcome. TZ Burton, welcome. Mr. Sean, hey, brother. Trader Isaac. I thought about not doing one, but I said, you know what? Let's get it done. Futures market will be open tomorrow. We do have an important report coming out. So I figured let's do it and get ready for tomorrow. Talon, are you camping now? William, welcome. Okay. Let's continue on. So a lot of strange things are happening right now. And I'm not the type of guy that goes by the phrase "it's different this time," but something's happening out there, and it's. Let me bring up this chart here. We're going to do a correlation. How do I want to do this? I'm going to bring up the gold mining sector. Then we're going to correlate it relative to the US dollar. Come on. Bear with me. And we don't want to use a daily chart. Not yet anyway. But we want to go to a quarterly chart. Okay. So clearly, if here's the dollar and its correlation to the gold mining stocks, they rarely, if ever, are above the zero line. If they go above the zero line, that means they have some sort of a correlation, positive correlation. But usually it's a negative correlation, not 100% of the times, but in general, it's a negative correlation. So dollar up, gold mining stocks down. That's the history. This is a quarterly chart. This goes back a very long way. I'll go to a yearly chart because I really want to drive home the point of the inverse correlation. And I pound the table on this all the time. There's not a lot of data here. I pound the table on this all the time. But something new is happening recently. And normally when it does happen, you have a geopolitical event. And what is happening? Well, you're seeing, I don't know if it's going to reflect on a weekly time frame yet, but let's try it. Nah. Let's go to a daily chart. Better. So what you're seeing here, and you've seen it before, where the dollar and the gold mining stocks trade in tandem. This rarely happens. On this chart here, it happened once, twice, let's call this 3 times in the past year. Not a lot of times. And it has briefly it stays that way. So what is out there that's driving this? What's propelling this? I think what it may be is Japan, because Japan cut rates for the first time in like 2 decades, not too long ago. And this is like 2 weeks ago. Here's the Japanese yen. I don't know how much data is here. Not a lot. Well, it goes back to, there's plenty of data here. Okay, so here's the Japanese yen going back to the 70s. We're at levels on the Japanese yen that we haven't seen since 1990. And it's going lower. But the Japanese the BOJ is raising interest rates, yet the Japanese yen is falling. Now, for those not familiar with what's been going on over in Japan, they created quantitative tightening. They created basically what we're doing here in the United States. They own the vast majority of bonds that have been printed. They own a lot of the stock market, the BOJ. They've been propping up that economy for decades now. And so they finally start raising rates. Why? Because the inflation over in Japan is beginning to rise and rise aggressively. The problem is that the Forex markets laughed. They laughed. Here. Let's go to a weekly chart. Let's say it was 2 weeks ago, they cut rates. You would think that the Japanese yen would rally. It didn't. It fell apart. We're very close to hitting 52-week lows here on the Japanese yen. So what does that tell you? It tells you that it's not enough. Whatever they're doing, whatever they think they're doing, they're too late. They need to be far more aggressive with their rate hike policy. The problem is for the Japanese is that you think that we have zombie banks and zombie corporations. You ain't seen nothing like what's going on over in Japan. That's why they own the bond market. They own a lot of the stock market, the Bank of Japan. So there's something very, very wrong with Japan at current. And I think that's one of the reasons why you're seeing the flight to gold and the flight to the dollar acting so well. And as a matter of fact, the Japanese just had an emergency meeting. It was posted earlier in the Slack forum. I think it was either today or yesterday that they had that meeting, because whatever they thought they were going to do to fix their problems ain't working. Now, keep in mind, this is the third largest economy in the world. They import tremendous amounts of raw goods to export. So Japan is a very, very major player. So we know that the Forex markets are not looking good for the Japanese. Something's wrong out there. You have gold mining stocks, silver, oil, gasoline, all rising along with the US dollar. Let's take a look at gold. Gold relative to the S&P 500. Do I want to own the S&P 500 right now, or do I want to own gold? All I need to look at is this chart here. Gold relative to the S&P 500. Okay, what do I want to do? What is this doing? Oh, look at this. Let me take my crayon out. What do I have going on here? Wow, look at that. On a relative basis, gold is outperforming the S&P 500. Not only that, you have a higher low, and it's breaking out of a long-term downtrend channel. Gold is going up a lot higher. We own it. But what about silver? Silver has not run yet. So how is it doing relative to the S&P 500? Well, it's setting up really, really nicely. Again, let's take our crayon out. No major breakout yet. Oops. You have one here. This is like a parabolic sell-off. But now we've broken out. What are we doing? Higher, low. So on a relative basis, silver, even though it hasn't broken out yet, is performing better than the S&P 500. We bought more today. What else on a relative basis is doing better than the S&P 500? Look no further than oil. Oil weekly chart. This sucker is getting ready to run. We have been in a very, very tight consolidation for quite a while. And one thing I'll point out is that oil correlation, oil relative to the S&P 500, usually they're pretty tightly correlated. That correlation is declining. It's decaying now, where you have the S&P 500 pretty much doing nothing now, and oil is beginning to gain steam. What about gasoline? Well, this one here takes the cake. Gasoline is just gone insane relative to the S&P 500. Beautiful, beautiful uptrend channel on a relative basis. And guess what? We just reversed off of the lower band of the rising uptrend channel versus the S&P 500. Another way to look at it, this is only a daily chart. Let's take a look at it on a quarterly chart. Quarterly time frame, which ended today. Gasoline versus the S&P 500 is up over 17% relative to the S&P 500. Do I want to own gasoline or do I want to own the S&P 500? Give me gasoline. Because the chart's saying this wants to go up higher relative to the S&P 500. So what I'm supposed to believe here as we go through these charts is that here's the Federal Reserve probability of a rate cut going out to June. 63% probability of a cut in June. Another one in July, nearly 78%. September is a lock at 100%, guaranteed, no doubt about it. We're going to get a rate cut. There's only one problem. Actually, a couple of problems. We have GDP growth of 3.4%, supposedly. Supposedly. But why do we have that 3.4% GDP growth? It's only because it's not the Democrats. It's the Republicans and the Democrats. They just passed another $1.2 trillion worth of spending. That'll probably get us $100 billion, $200 billion worth of GDP. It'll be enough to keep this party going a bit longer. But we're running out of musical chairs. So they're buying GDP. It's a horrible investment what they're doing. They're buying GDP growth. So we're borrowing more. And what is that doing? It's goosing up GDP, but it's also goosing up oil prices, gasoline prices. Has anybody seen cocoa prices lately? Look at this. Let's go to a quarterly chart. Look at this. Up 130, nearly 133% in a quarter. So what we like to do is we like to say, okay, what's next? You know, we have our gold position. We have our gold mining stock position, and we've been in them for a while now. What's next? Well, we know that AI is eating up a lot of energy. we know that energy stocks are rallying in a very, very big way. Here's XLE, one of the best performing sectors, and this is going up higher. I think that, and this is a bold statement, I think we've quite possibly seen a bottom in natural gas for this cycle. That doesn't mean we can't come back down. This is a quarterly chart of natural gas. And I was looking at a 4-hour chart the other day. And I said, isn't this interesting that we have a very, very good Bollinger Band squeeze setting up here? Now, to be fair, Bollinger Band squeezes can go one direction or the other. But I figured, you know what? I know where we're at on a relative basis to historical support. Natural gas has gotten beaten up dramatically. So if it sells off, I'll add more to the position because I know we're at historical support. Sure enough, I bought about 500 shares of Boyle. Next day, it dropped a percentage point. So I added 2/3 more to the position, and I sold covered calls, which expired today, worthless. So now we're flat on the common stock, and we made money on the covered calls. So what I think is going to happen here is that we're going to begin to perform a bottoming process on natural gas. And it may not even be necessarily that natural gas is in short supply. It just may be that it becomes a store of value. If you have oil rallying, if you have energy stocks rallying, if you have gold rallying, commodity complex rallying, CRB commodity complex, we've spoken about that before. If these are all rallying, what's not rallying that could rally next in sympathy? I think it's going to be natural gas. Now, every Thursday, you get the nat gas inventories report that comes out. And in blue, I always look at this one here, lower 48, meaning states. And you can see that the working gas underground storage compared to the 5-year maximum minimum is dropping off of a cliff rapidly. At some point in time, they're going to need to build. But where is natural gas in the cycle? On a quarterly chart, we're at historical price points where wherever, usually when we hit this price point, last time was back here. The second quarter, April quarter of 2020. What do we do after that retest of the support level? We rallied 567% on natural gas. What happened the time before that? Well, that was back here. July of 1995. What happened then? Let's just use this as the bull market. Rallied 612%. And if you want to argue that you could have held here and held on longer, I wouldn't have held on that long, to be honest with you. And I probably wouldn't have bought back in. So we'll keep it conservative. So I think that what we're setting up for here on natural gas is quite possibly a very good and rarely seen historical entry point into the commodity. And keep in mind, commodities are moving up higher. Now, on a weekly chart, we actually bottomed out here the week of February the 20th. And what we could be doing is obviously we're doing a lot of back and forth here. I think that we're putting in a bottom. I think that we are getting ready for a probable breakout. Does that mean that they can't move this lower intra-week to try to blow out the last of the week longs? Yeah, they could do that. No doubt about it. Natural gas in commodity trading is known as the widowmaker. It's just crazy volatile. So you really need to buy at historical supports. If you go on it, own the common. Like we own Boyle, which is really very, very volatile. That's a leveraged ETF product. So I think that natural gas is getting ready for a big move up higher. What else do we have to go over here? Let's go over the weekly charts for a moment. Did I want to go over anything else here? No, we're good. Yeah, he's a real disappointment. I never trusted him anyway. But, my wife was asking me about, these guys earlier about the impeachment of Mayorkas. And she's like, it's going to go to the Senate, right? They impeached him in the House. I said, they're not going to do anything over in the Senate. It's already planned. This guy's not going anywhere. He's an arch criminal, and he's not going anywhere because I'm not even going to get into it. It's very, very sad. I literally get physically upset when I think about what's going on right now. All right, let's talk about the weekly charts of the averages. We haven't talked about equities per se yet. This is AGQ silver. We bought more today. And the reason why is that for a couple of reasons. One, we have a nice bullish reversal bar. And for those not familiar with the terminology I'm using, there's a 5-part video tutorial, my top 5 favorite candlestick patterns, free below. Take advantage of it. What we did this week is that we flashed a bullish key reversal. Why is that important? Well, 1 week doesn't matter all that much. It's the series, it's the process that matters. And we were in a long-term downtrend channel, but that's at the precipice of ending because we broke out here the week of March the 11th, failed breakout the week of March the 18th, pulled back to the retest of historical resistance. What did the market tell us this week and last week? It's now support. What was resistance all of this time is now support. That means that the equilibrium of bulls versus bears has now changed. You have more bulls than you do bears. That was not the case for a long, long time. So I'm looking for a breakout here on silver. Now, if I'm wrong, we close down below the lows of the week. I have a very small loss to stop out of. If I'm right, well, we have a heck of a lot of upside potential here on the trade. Why else do I like silver? When you take a look at on a shorter time frame, oh, look at this thing after hours. Oh, darn it. Up 0.75% after hours. And this is what I was looking at, one of the charts. Very tight Bollinger Band squeeze in orange. But let's pull back further. 4-hour chart. Look at this squeeze setting up here, and now it's firing off. So we're already up on the shares that we added today on silver. Let's stick here for a moment because it's going to be a quiet market tomorrow, and a lot of interesting stuff happens during quiet markets. Look at gold. That's up nearly 0.75% after hours. Natty gas. That's down. Let's check in with gasoline. That's flat. Crude oil. Light sweet crude. This is showing we're down, but we're not down. This is inaccurate. We're up versus the close. Let me go back to nat gas. This is accurate. Okay, it is down relative to the close. Copper weekly chart. How do we close out here? This is looking really good. Big ass Bollinger Band squeeze forming up. I love commodities. I heart commodities. But let's talk about bonds for a moment. Let's go to sleep for a moment with bonds. But they matter. They're critical. Critical. Bond yields down on the week, but they held support and they bounced off of their 50-period moving average. Bond prices up on the week, stuck at resistance. This is the TLT. How is our volume light on the week? Treasury inflation protected securities continues to consolidate, bias to the upside. Inflation, folks, dollar. Again, I don't get the correlation. It's had me perplexed for a while now. I think the dollar is calling BS. Long story short, it's calling BS. The Forex markets are calling BS on the Federal Reserve, saying you're not cutting rates. You're not doing it. You've been telling us you're going to do it for the longest time, yet you haven't done it. You're going to stick with an ease, and you're going to hope that works. And if the market begins to sell off hard, along with the rest of the economy dumping, then you'll step in, but not until then. Euro, weekly chart, bearish reversal bar, basket case. Yen actually closed up on the week. Maybe that meeting they had today did something, but only closed up fractionally. Volatility closed down, held the lower band of weekly support. Still a ugly chart in terms of volatility, therefore bullish for equities. Daily view. Up on the session, but nothing to worry about here per se. Dow transports look awesome. I got to say that. I mean, really, really looking good to the point of me wanting to say, okay, what's leading this? It's not the carriers. Could be FDX to a certain extent. Yeah, not UPS. CNX, how are the rails doing? Rails are ripping here. I think the airlines were up this week. Yeah, UAL up. What did BA do this week? It was actually up. Wow, look at that. Shocker. Dow Jones Industrial Average up on the week by over 0.75%. S&P 500 up on the week, but in a wedge formation, an ascending wedge formation. Volume. Keep in mind, this is an abbreviated week, so we'll take that into consideration. Let's say it was a push on volume versus last week. That's a good question. So a lot of it all depends upon how long it takes them to get that bridge out of the way. And I'll be honest with you, I have not been keeping up with the news on that. I think it's going to cause a log jam. I just don't get the vibe, to be honest with you. I just don't get the vibe that it's going to be as detrimental as a lot of people think. I think it's just going to be another hit to the supply chain, which will probably quickly get resolved. But unless, of course, you have the incompetence of government that is in charge of clearing it up. So it all depends upon the efficiency of whoever's cleaning it up, to be honest with you. And I have to do more research to be fair. But I just don't get the vibe it's going to be as impactful. Perhaps for the autos, they send a lot of automobiles out of that port. What did GM? All you need to do is really take a look at the stocks that are impacted. You know, they send out a lot of coal out of there, but we can take a look at coal in a moment. GM up 5% on the week. Ford up on the week. Arch Coal down slightly on the week. Nothing really to speak of to worry about here. So I go by what the market tells me, not so much by what the headlines tell me. And my gut is that if traders would have seen a trade here to be had, they would have acted on it already. The minute that it happened, these guys are fast. Uh, they would have been all over that trade in a heartbeat. I'm not seeing it anywhere. So, and that doesn't mean it's not out there that something's gotten hurt. I just don't know about it. So, if somebody has a trade that worked out because of that closure, please post it here. I'm interested in it. So, good question though. Technology down week. Semis down week. I think we're rolling. That's rolling over yet. We're stalling out. Very light volume though. Let's go to a daily chart for a moment. Semis are so important to this rally. This could still break out. Let's do something here. I want to go and take a look at, on the quarter at least, S&P 500 relative to the trip Qs. Well, on a week alone, the S&P 500 outperformed the trip Qs by over 0.75%. On the quarter, I don't know, but let's check. Wow. Unmeasurable outperformance, up 1.68% better. So really what this shows us is that we were anticipating at best a bit of sector rotation, and it's clear that we've gotten that. That Magnificent Seven trade that's kind of fallen apart. It's only a magnificent couple now, really. And even NVIDIA, I think NVIDIA took it on the chin this week. I don't know what it did. I think it was up today. Up 82.5% on the quarter. Up fractionally today, but on the week, not a good week. So this is the first down week. Wow. In 11 weeks. Crazy. Apparently, it's a big port for deliveries to Mid-Atlantic. So many of some. Okay, yeah, and that makes sense. I got you, Jody. I got you. All right, let's go continue on. We did technology, biotechs. They closed up on the week. Maybe it's time to revisit this trade. We booked profits here a couple of weeks ago. Daily view. We recaptured support. So it looks like it's time to get back in the water here. Staples, nice move up higher. We're positioned in Altria Group. We got in when it was paying 9.25% dividend. And that's just been on a tear of late. So that's treating as well. Discretionary names. No breakout yet, but looks like they may. Emerging markets doing well relative to the rising U.S. dollar. Usually they trade inversely of the U.S. dollar, but they're doing very well. Energy stocks. We went over this already. On a tear. This is going to have to pause soon. We bought in on APA, Apache. This is one of our top stocks a few weeks ago, and it's been on a tear. What did it do for the month? Nice. 15 up 15, nearly 15.5% on the month. Crude prices. We went over this. I don't want to repeat myself. Boil, we're long of. Sticking with this trade for a moment. Momentum, Stokes, hooking up, RSI, hooking up. Look at the bearish divergence here. Or bullish divergence on Boyle. Take note of RSI. So we have a wedge formation, higher lows, no breakout, but take a look at the price. I think this is a bottom. I think this is a bottom on nat gas. And frankly, the spot price for nat gas bottom back here. This just goes to show you got to be careful with these leveraged ETF products. The spot contract bottomed out back here in late February, yet oil broke down to new lower lows. These are trading vehicles, not investments. So please be careful of the time decay. One last thing here on the chart of oil. And if we do get a rally, we'll be selling calls. That offsets any time decay plus. Double bottom setup on Stokes. I think we're done going down here. Gasoline prices, again, consolidating nicely. They're moving up higher. Gold, we talked about, on a tear, moving up higher. Let's go to some chart requests, and we will call it a night. I got to go to members area first. What do we have here? I have time to go over a couple of more symbols if you want to throw them in there. Okay. Oh, that was from a couple of days ago. Okay. ASM. Avino Silver. It's a beautiful chart. Breaking out. This is a weekly chart. Looking very, very nice. It's going up. Daily view. Beautiful consolidation. I think this is breaking out. Anything silver, I like. Oh, that's a play on Cocoa, isn't it? HSY. So I'm torn on Hershey because at some point in time, that cocoa chart is going to blow up. It's going to drop like a rock. Now, the good part is that Hershey is going to have to raise prices. Now, when cocoa prices come down, you know they're not cutting prices ever again. So their net margins in the future are going to look a lot better than what they are right now, even with increased prices. So I like Hershey as a longer-term play, a bet that cocoa prices are going to break and that Hershey is going to, their margins is going to go like this. They're going to blow out because they're not going to cut prices. Would you hold Bitcoin ETF IBIT over long weekend with? Well, to answer that question, we'll just take a look at Bitcoin. Bitcoin's looking very good. I mean, we went over it on a relative basis versus the S&P 500. You know, it's a beautiful higher lows, higher highs. I think this is going up higher relative to the S&P 500. Doesn't mean it. Let me rephrase. I need to rephrase that. Both can go down, and Bitcoin could still outperform because it goes down less. So I need to put that into context. So now let's take on a relative basis versus the S&P 500. It looks good. Now, how about on a standalone basis? How is it looking? How did it close out the quarter? Up 67%. I think it's going up higher. It made new closing highs on a quarterly basis, weekly basis. It's overbought. 85. It's overbought, but we're still putting in higher lows and higher highs. It looks like it wants to go up higher. ADX is getting to overbought levels. ADX is generally overbought at 55 or higher. We've been higher before. We've gone up to about 70 in the past. So there's more room to run here. So I think that, yes, I'd be fine with holding it over the weekend. I have no problem with it. Is it getting frothy? Sure. Yeah. But I would still stay long of it. If SoFi didn't force me out of my position because they stopped doing business with cryptos, I would still be in it. They forced me out of 47,000. So I would still be in right now. I didn't want to sell. And I couldn't transfer it to another fund. I had to cash out. So I got to pay taxes on it. So thank you, SoFi. Anyway, I digress. I went there with my kids when they were little. Great Hershey martinis. Drank a lot of them. Good stuff. And Lord, I needed them. Folks, thanks for being here. Happy Good Friday. Happy Easter. And everybody have a really great weekend. Many prayers to you and your families. Thanks for spending some time with me. And have a profitable trading week. Next week, I'll talk to you soon.